Hey everybody, Courtney Smith here with this week's edition of Wall Street Winners. Let's get right to it. Let's skip this and go right to this. So the market continues in its overall lack of upside momentum. I've talked about this before, but when we made the lows back in December, the market was moving up at about a 70-degree angle. Then in February, we were kind of going at a 45-degree angle, and now we're going at about a 20-degree angle. In other words, we're basically running out of gas here. Right now, we still have to consider it a bull market. We still have to be playing it bullishly, but it's running out of gas. Let's take a look over here at the Dow, and you can see that for a very short period of time, we really were equal between the buying pressure and the selling pressure. But in the last several days, we've seen the buying pressure come back in with the little green line moving up and the little red line moving down. So that's bullish as well. And of course, Friday's price action, we got a nice pop in the market because of that change in buying versus selling pressure. The Nasdaq also remains probably the strongest of the three major indices. And we've been talking about this for several months. Now, normally the Nasdaq outperforms the other indices in January, but we're now in April. So this outperformance by the tech sector, by small caps, is going on longer than it normally does. So that's of interest to me. Now, the other thing, which of course has been differentiating the NASDAQ from everything else, is the purple predictor is very strong, showing that the smart money is buying the NASDAQ. They're not buying the Dow. They're not buying the S&P. They're buying the NASDAQ. Seasonality remains neutral, although I see that the purple predictor has perked up. Seasonally, everything should be bullish till July, and so far that's exactly what the market's been doing. Now, we need to stop here. The yield curve, as you can see, is negative on the chart on the left from 3 months out to 5 years. It's positive after that, and that's always encouraging. But if we look at the chart on the right, you can see that we went negative on that yield curve, and that has always led to a bear market a year later. So we're now clearly on the lookout for that. Now remember, this is a 1-year leading indicator, so that we can have a big bull market from now until then, but we're not going to be bullish a year from now. That is very clear. We've highlighted this a lot lately, so I'll leave it for now, just reiterating what we've been talking about. Asset allocation, also as part of this, once again, see, we're not in a bear market, and it's not bearish. We're just slowly but surely cutting out the underpinnings of the bull market. So here we see that money is flowing out of the stock market and into the bond market as a way of reducing risk. In other words, what's happening is that the market is saying, okay, we're going to go higher. We're just not going to go higher in a frisky way. We're gonna kind of hunker down. Maybe we'll buy some utilities, we'll buy some consumer staples, and this chart is saying, and we're going to buy some bonds. And this chart is once again saying, you know what? Don't really want to get into a risky kind of situation. We'll buy stocks, but we're going to buy the less risky stocks. Global shares, not as bullish as American shares, as you can see. Up until this last week, we've been running pretty parallel recently, but as you can see, we've started to struggle here in the global sector. Why? Global markets have weaker economies than the U.S., and that's showing up in their stock market. The bonds, however, super strong, big gap up late last week, follow through momentum. This is where the money's going, that's for sure. Really should be long bonds, not stocks. Now, our bond indicators are kind of a mixed bag. The green line shows 10-year treasuries as coming down, the yields coming down pretty sharply because of the yields in Germany coming down. That's the blue line. But if you look closely, you'll see the gold line and the chart itself are both still pretty much going up. That's gold and commodities. Now, they lead interest rates by about 6 months, minimum 3 months, but mainly 6 months. So they're saying that interest rates may be coming down now, but they're going to start to go back up in a few months, something like that. The dollar, God, I'm so bored with this. All it does is go sideways, so I can't really get excited. Now, if the dollar is going up, we should see gold go down, and that's the problem. Fully paid up members know that there's one indicator in our fully paid up members section that is wildly bullish, but everything else is not. If we look at our gold indicators, they're starting to drift lower. They're starting to say we should have a bear market in gold. So we cannot be aggressive at all anymore. Crude oil, I've been on the money perfectly now for months. We are still going to have this bull market. It ended up being less bullish than I anticipated, but a bull market nonetheless, and my objective is up into the high 60s, 68, maybe as high as 70, and that's a pretty significant move from this level. So continue to stay long oil here. Bitcoin is another thing that I'm starting to get really bulled up on. I'm not long, I'm still short, but look at the purple predictor just taking off, showing that the smart money, which had been big sellers of Bitcoin before, is now buying Bitcoin down at these levels. I'll wait till it breaks the 55-day high before I cover my short position, take a nice big profit of thousands of dollars per Bitcoin, and go long. So right now I'm short, but I'm getting bulled up. I don't override my rules, so I'll wait until we get a buy signal. Now, also coming up through Wealth Builder, we've got a bunch of classes coming up here. The big hot one, though, is Las Vegas at the end of April. If you're interested, contact us at that email up at the top. We also, this year, we're going to be doing the same class in Los Angeles and Orlando, so that's very exciting. We haven't done it in Orlando in quite a few years. Actually, we haven't done it in Los Angeles in quite a few years, but you can see we're doing it basically quite often. Then we're also coming up in October, our stock trading master class is coming up. Over on the options side, Options Success School coming up in the beginning of May. We're also doing it in Los Angeles and Orlando, and then having a master class in October. So I'm very excited. For all information, go to the send for information, go to the website, all that sort of usual stuff. Of course, our special report, very important. Stock Butler, very important. Thank you, freebies, for coming. And fully paid up members, hang on just 1 second.